This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hi, Scott. Thanks for joining.
How you doing, bud?
Doing good, doing good. Looking forward to catching up, see how things are going in your fundraise.
Yeah, not going. That's exactly what's going on. Been horrible out there. And first off, I'm sorry. I was at a conference and I parked myself on the side, went to go join your last one and couldn't get in. I tried, but for whatever reason, couldn't get in because I wanted to hear the pitches and all that stuff. So it's been tough. You know it. I don't need to tell you anything. I'm not giving you any secrets out there. I've talked to a lot of people. I've had a lot of good interest, but I just have not been able to close the deal simply because people say, well, you need to go find a lead investor, or you need to, I'm willing to come in, but I don't want to be the lead. And I'm like, yeah, I've heard that from now, 10 companies. So I've got a great pipeline of people that'll come in after the fact, and then the next thing is, and I love this one. It's a constant. Let me move the goalpost a little bit further. It's always, well, I like your idea. It's a great idea, but you don't have a product, or you haven't developed anything, or, oh, you developed it. Oh yeah, but you don't have any traction. Oh, you don't have your traction's not far enough along. I need you to be at 250,000. It's like, you know what? By the time I get to where I need to get to, I don't need you. What are we doing here? So, I saw your email the other day. I don't know if you sent it to me or if your automated system sent it to me, but I wanted to connect on a couple different levels. One, I wanted to see, what are you experiencing now? What is your investor audience like? Are they still staying active? Or, what are you seeing? And, how are some of the deals that have gone through the pipeline, how they've been doing?
Well, it is tougher now than it was a couple of years ago. We do see deals getting funded, but they're good deals that are getting funded. And valuations have to be market rate. And what was 3 years ago was not market rate. And so some people are hanging on to those valuations. But what you have to do is create a little bit of scarcity in the deal so that there's what I call good value shares available, low price, low valuation. And then there's higher price ones. And so you're raising $1 million. And so what you want to do is take the first 250. And what valuation did you put on the $1 million, for example? Or valuation cap if it's a convertible note?
So let me tell you where I am. My original valuation was at a $24 million valuation. And that is now, what I converted that to now is a convertible safe, like a safe note I included a cap rate of 13 million for the first 500,000. And again, it's a cap. Like the point of the safe was not to necessarily put a cap, but I put a cap on there. And then I had a tiered structure, 13. And then I had so basically I cut my valuation in half almost. So I don't know if that sounds good, but I did 13 and then I did 15 or 16 and then I did 17 and I was giving them a 20% discount for the first 500, 17.5 for the second tier, 15 third.
Well, I think we're still out of market in this case. What revenue do you have, or what revenue did you end up with in 2023? I know it's not a lot, but what was it?
Not much. I mean, it's under 10,000, it's not enough.
Okay. Yeah. So if you're under $10,000, you're at the $3 to $5 million valuation cap. Yeah, and that's just part of it. We just don't have 20x multiples anymore. We have 7 to 10x on SaaS deals. You do have AI that helps a lot and so forth. What was the user engagement with the product? When people used it, did you have any beta users? How many daily, weekly, monthly active users was it? What can you tell me about that?
Yeah, I don't have a ton of data on all of that activity, but I can give you some high level stuff. We have overall a little over 83 registrations. I think that was just as of maybe about 3 or 4 days ago. I probably had about 15 paying users, and generated over 250 stories with groups. I'm in the process. I just signed and again, I know this is not attractive to investors, but I just signed an ad agency to do a B2C campaign launch for just to attract users in the system. So I'm doing that typically because I'm like, I'm done with all these people. I just want to get to break even. So I'm not bleeding out every or on my expense line. And I only need to get to like 2,500 users, which is not a hard mark to get to at $15 a month. So I think that that's my plan right now in terms of, so to answer you, to kind of do a little follow up to your question, I'll have more data on user activity engagement coming up here shortly.
Right. So what comes before revenue is user engagement. And what you want to do is get a test going. I took $5,000, I put it through this channel, Facebook, whatever, and I got 150 interests, I got 100 signups, and I got 70 daily active users out of it. And I did another $5,000, and I got the same result. So it's very consistent. So it's over and over again. I know I can generate 70 users with $5,000 of spend, and 70 divided by $5,000 is my cost of customer acquisition. What you have to do is show that this is a known number. It's predictable. It's repeatable. I can do this all day. Every $5,000 you give me, I'm going to give you 70 users, whatever those numbers work out to be. That's what you have to show is that systems are in place for acquiring customers. It may not be big numbers, but it is predictable numbers. Investors don't care about size at this point because it's early stage. It's not going to be big. What they care about is predictability. We know it's going to happen, and repeatability. I can do this all day. And so you want to do maybe 2 or 3 of those tests with ads and come up with what I call the repeatable, predictable funnel. I put this many leads in at the top. I get this many that qualify, and I get this much revenue at the bottom. You tell me how much revenue I need at the bottom. I can tell you what the steps are. I can tell you how many leads I need to put at the top of the funnel. That's a slide that needs to be in your deck to show this is a existing system. Because what people are doing is they're trying to use revenue to show, demonstrate the systems are in order. And while we have some, we just need a little bit more. And so what you want to do is do some tests and then show that funnel to show that this is a repeatable model. So that's one thing. You have to show that, it's sticky, people are engaging with it. And of the 70, they each, write 5 stories, and they're in the program for at least 3 months. There's some, continuation of the process that shows how long they stay in the program. Very high level, very simple, not complicated, but just shows that it's not just one and done, but they use it for a while. So there's some stickiness in there as well. The second thing you want to do is get a market rate valuation on this thing. I'd take the first 250 and I'd put it for $3 million. And for 30 days, you get this for $3 million. And when this 250 is gone, we're going to be moving to the next 250, and it's going to go up to 5. And just so work your way up like you were doing before, but you're really not at 13, 15, 17 million dollars. With that, you really need to be at, really at $1 to $2 million of revenue, but we're at 10K. So we're just a little bit out of market there.
Yeah. I mean, I'm like on a man on an island that doesn't have a fucking clue, to be honest with you, where the market is. You're a little closer to that, to be honest. But the point of putting that cap in there was to just sort of set a ceiling, so to speak. Because somebody told me that, if you're going to do a safe round, they're probably going to want some sort of cap in there. And I didn't want to give them a cap that was like low, because if I gave them too low of a cap, it's like, what's the point of doing a safe round? I'm better off just doing, because I'm not going to give them 20% off 3 million, right? I mean, that doesn't make any sense to me.
Well, I wouldn't give them 20%. I just did a low valuation cap, because that's the number people focus on. They focus on the valuation. Yes, discounts can come in and help and so forth, and maybe use those as a sweetener from time to time. But for the most part, they're looking at the valuation cap. And the valuation cap needs to be, if you were doing a price round, what would be the valuation? Need to be the same thing. So if you're thinking the 17 million is just giving you lots of headroom, but really your valuation is going to be at 5, well, you'll communicate that better if you make the valuation cap 5. because now they know, okay, this is what I think the deal is worth. It's worth five. The point of making it 250 is that you want to go out and to all your current guys and say, I am now raising at 250 at a $3 million valuation cap. And when that's up, I'm going to go to the next 250 at five. And then what you do
Yeah.
is you calculate the interest and committed. How much money is floating around your funnel? You have quite a few investors. Have you ever added up how much that money would be if they all came in? They won't, but how much would that be dollar wise?
These are big funds. I mean, these were all minimum of, a half a million. The other ones were mainly like at 1 million to 10 million in their seed round. So they were a pretty big group, but the one in particular, they were very interested. But then they came back and told me they had a competitor in their portfolio that wasn't going to work. And I have another meeting. Well, I have another meeting with Andreessen Horowitz next week. And I have a meeting with another top ed tech firm. Again, I don't know like if any of these guys are going to do anything because I think they're probably just sitting around and waiting and just sort of seeing what's going to happen. So I mean, not holding much hope out, to be honest with you.
Right. Well, the
I'm
VCs
just
want to
working.
see a $1 million revenue run rate. So when you get to 80K monthly, they're going to start to get interested. Between here and there, it's angels, it's individual angels, not even angel groups. How many angels do you have on that list of 80?
Not any. I mean, I have family offices. That's the only other area I was in.
Yeah, they're still a little bit later stage. You really want to go after individual angels. You want to go out and you'll be amazed at how many people, when they hear your story, will pull out a checkbook and say, I'm in for 25. Who do I write the check to?
Yeah, I know.
That's diligence right there.
Yeah. No, I really believe that like there's like we got a great mission here and that like I just have to get the word out. So that's kind of why I wanted to connect with you and figure out what might be the best strategy here to go forward. And listen, the number, I don't even care if it's 3 million or 1 million or 5 million or 20 million. It's that like, to me, that doesn't matter. What matters is continuing to progress forward and taking the thing to where it's going to go. You know what I mean?
Right.
I mean, it matters to me, but like, it's worth nothing right now.
Right.
It's
Right.
it's
So like I
literally
say,
worth nothing.
a safe note at 3 million for the first 250. And then what you do is you tell your angel guys, okay, I've calculated the interest and committed of all the people, and there's $700,000 worth of interest for that 250. First come, first serve. If you miss that boat, you'll be on the next 250, no problem, but it'll be at $5 million is what it's going to be. And people are gonna look at that and say, well, there's some scarcity here. There's a time frame here. I gotta go there. I may lose it. So you can start to build some of the FOMO into this. You're just not in the game for the VCs yet. They're really on the next round. But I'll be candid, it doesn't go pre-seed, seed, series A, series B. What it's going to do is go pre-seed, seed plus plus, another 250K bridge round, and then a series A. And so
Yeah.
just be aware of that. It's not going to be a tiny step from seed to series A. It's going to be leaping the Grand Canyon. So we're going to have to, think about that and start with the seed, which is where you are. You're in the market, you're selling it. That's good. But this is angel round, is not VC round. There are some pre-seed VCs out there. I have yet to meet a pre-seed VC that doesn't come back to me and say, well, I really want you to sell 100K first. Okay, well, that's not true pre-seed, is it? But, when it comes down to it, they just really want to get in at an early valuation, a very good valuation, and then they're going to come in. Some of the VCs may come alive if you put a $3 million valuation on it for the first 250. They may throw 50 at it just to get in the deal. And because right now, 12, 15, 17, we're just off by, now that's pandemic valuations is what that is. And that day's gone. We're now in a new world here. And like I say, the first round is what I call the minimum round. We're doing minimum viable product, minimum team, minimum fundraise because the valuation is very low. When you start to get up to $1 million of revenue, well, now we can start talking about 12, 15, $20 million. What doesn't come through on the slide deck is the value of the AI. And that's a question that comes up a lot now with investors. What kind of moat do you have around the AI? Are you doing a vertical
Oh, yeah.
SaaS play? Or are you doing a simple chat bot on the front of it? How deep is that AI platform? It doesn't really come through on the deck itself.
Yeah, well, that's a great question. And no, when you say a moat, I mean, do I have a I have a patent pending on it.
Proprietary data is a
but
moat. I've trained it on proprietary data that other people don't have. That's worth something.
yeah,
No,
yeah.
I scraped it off Google.
Well,
Everybody and their brother has that. This is going to be no different in
nope.
about a month.
No, so we will have, one, we have proprietary, we have 130,000 words in our database, which is huge. We know every grapheme phoneme relationship to those words, which is not something we had to build that. That wasn't available. And the second part that we're going to have of super value is going to be non-fluent speech data. And what that means is that there's a lot of fluent speech data out there to train AI, but we will have a special set of data that's done at the phoneme level that's never been available in the marketplace. So I think there's value there. I'm not really sure how to play that at this point, but that's that one. The last part I'll tell you is that I'm waiting. I'm going to hear this week or early next week. I'm going to hear back from a foundation here in Pittsburgh that I filed for a grant for 1.2 million. I have a high degree of confidence that we're going to get something. Let's call it $500,000 at the minimum to $1.2 million. I think I'd be surprised if they don't, at a minimum, 500,000. And the way I structured the deal, and the reason why I think we'll have a chance to get the whole thing, was the grant was really about how do you deliver to low economic income, families and stuff like that to help lift them up. And, obviously my focus is on literacy, and we're giving away free license. 1/3 is going towards, product development, marketing, and sales. And the other 2/3 is going to free licenses.
All right.
So
Well, that's great.
So
It's great to have that family foundation behind you. If that comes through, big logos all over the deck about they're supporting you and they put money in, whatever it is, it's big, big, big to put in there. You do have proprietary data. I find almost every deck I come across has AI in it. Now, a year ago, that was unique and special. Today, it's table stakes. Everybody's got AI. So now we have to go to the next level and explain how our AI is better than just the plain vanilla kind. And proprietary data is one. And then if you're a vertical SaaS play, that's a very known business model. It means we narrow the space very tightly, and that allows us to go very deeply into the space without breaking the bank. It's more capital efficient. I can get a better solution out of it because I'm not trying to take care of every case in the world. I've got a very specific area I'm going in. And you might want to position yourself as a vertical SaaS play. That's a known business model. People can appreciate that. They see the value of that, and that could attract more people. Google vertical SaaS play and see if that's something that really does fit what you're doing, because you can do a lot of very interesting things. One of them is if you win an account like a school, you can then potentially use your technology to go to other applications in the school. You extend out to their partners and channels and their vendors and suppliers and get into other areas. It can be very viral in that case. So that's one advantage, but check to see if vertical SaaS fits what you're doing. But I would make case of it. The other thing is you have AI. Well, what I like to see are branded marketing names. If you have technology base that's uniquely yours, you want to put a branded name on it, and it will land a lot stronger with the investor. AI sounds like I just got plain vanilla ice cream off the shelf and I've got what everyone else has. If I call it the XYZ AI system and so forth, well, now it's mine, it's unique, it's something special, it's something proprietary. And investors put a lot more weight on proprietary than they do plain vanilla. So you might want to think about using some branded names. And that's one rule we have is for every platform, every product, every technology, every data set, we have a name for it and you will get credit for it. If you don't have a name for it, you don't get credit for it. I can be selling the data for millions of dollars, but if I don't put a name on it, nobody knows. Nobody cares.
Yeah. So that's a great point. And well noted. I did give you an example on that 130,000 words. It's called the Luca Dictionary. So we have, so it's something that's very unique. And you can even go to our website. We launched 352 pages of content with a click of a button. And we launched all these words for kids to learn on these different age groups. And it's called the Luca Word Adventures. And the whole point is it was really an SEO play. And we've already started gaining traction. So we're going after 1.5 million searches a month. We've already started to climb the search engine rankings, which is cool. So yeah, so that's the next play that I've been working on. That's going to be huge and scalable. And the other thing, and I'm kind of spitting a lot of stuff at you just because I've done a lot since we talked in the last month. I'm going to sign a deal with an international firm who's done ed tech or done technology and education with international groups for the last 30 years. He is going to, kind of sell my product, and he feels conservatively that he can generate somewhere around $1.5 to $2 million in annual revenues within 18 months. So that's another big play that we're doing. And I'm going to sign another deal with another guy that's been in the ed tech space for 20 years. That's going to be able to turn around and help sort of market and sell to his vertical industry. So so we have some channel partners for the B2B stuff, and I'm working on the B2C side. So we're generating revenue. And, as far as kind of your last comment about AI being generic, the thing that makes us unique here is that the only way the AI works is through our speech recognition technology. And that's very hard to build. To give you an example, like right now, and I don't tell too many people this, but our speech recognition platform is about 60% accurate. Okay. That sounds really low. Okay. But to give you the best in the world is at 85%. Okay. So we are in the process of refining all of our speech recognition to the goal is by the time we get to April, May, the target is to be at 85%. And I've got 7 developers from CMU that are going to be working on that, along with like world-class, like speech recognition technology people. So, in order for the platform to really work and be totally different than anybody else, speech recognition is what makes the AI, tech. So,
okay. Yeah, that would be great to put it in there. You know what you have in the deck now, right? Speech recognition.
yeah, I know.
Speech recognition. I have no idea all of that's in there. All I know is that you have that functionality, but that could be, a sound spell out of TI. It could be something. It could be anything. But you're underselling it basically. That the name speech recognition doesn't capture it. You need a bigger name that really captures what the proprietary nature that it has. The last thing I have is the logo review. I see some logos in here around Pearson and so forth, but the family foundation, where's that logo? Is it in here anywhere?
The one that I just am waiting on the grant for.
Right.
I didn't put that in there. Because, we didn't do anything with them at that point. So
we're applying for it is what we're doing. So it's in the mix. It's in the game. And so one thing I say is go through for every logo, every channel partner, every company, every big name customer, every partner, put their logo in there. Their logo, not their name, their logo. And you'll find that logos land very hard with investors because it's a real company that is validating your work. The more logos you have, the more validation you have. Even if it's coming or we're in discussion or we're talking to or we're whatever, put the logos in there. Load up all the logos you can and sprinkle them throughout to show, because every logo is a validation point. If I'm here and I have 20 logos and you have 200, you probably have a stronger deal than I have because you have more validation points than I have. So I would do a logo review and don't be afraid to use them. Don't oversell it. Don't tell us you have the money from the foundation if you don't. But if you're talking to them or you're applying for it or you're in the game for it, just put the right positioning on it, and you'll still get credit for it because they wouldn't be considering you if you weren't in the game, I guess.
Well, that's a great point. And since I sent that to you, we won by the South by Southwest.
Accelerator.
We won the South by Southwest. Yeah, can you hear me?
Yeah. I used to judge the Accelerator, so I can see this deal being in that category.
Yeah, so we won the South by Southwest semifinalist for top startup. I won the innovator for regional EdTech conference, and I am in the second round of the tools competition, which is a global competition against 1,700 applicants. We made it to the second round, and that is to give you a perspective who's in that. That's the foundations behind that include the Walton Family Foundation, Bill and Melinda Gates, like they're major players that are in there. So yeah, all those people are in that one, and just the fact that we made it to the second round is pretty huge. And then we'll find out where we're going in the next couple months on that.
Yeah.
So,
all right.
No, we're moving in the right direction. So from your perspective,
you feel like you have your audience would be a good candidate for what we're doing?
You have to be in the market with revenue. We really have to sell it a little bit stronger with all the value props. I think the deck undersells it a little bit. If you came in our program, we would probably redo the deck with a better design. A lot of the content's good there for sure, but I think we're underselling some of it. So it doesn't really come across as strong as it really is. When I dig into it, I'm finding all these great value props in the AI, the speech recognition, the proprietary data, plan to monetize the data. We need to have a slide about monetizing data. Don't know if you do that or not, but that lands hard with the investors, another revenue stream. Even if it's just a visionary statement or roadmap slide to talk about how we plan to monetize it, still counts. And most people can't launch a business and sell data at the same time they're building it. They're going to do it usually 2 years later. But if you put a roadmap slide, that you get credit for it, so to speak. And you're already there with the AI for sure. So you might think about the data aspect of this, because I didn't see that come through, but that would make this a lot stronger as well.
Yeah, no, it's I don't know how to monetize the data, to be honest with you, but yes, absolutely. There's a data monetization strategy. I've updated that deck since I sent it to you, and I do have data monetization as a talking point in that deck. So,
okay. Well, great. Well, we're at the end of our time. Send me the updated deck, and let's just stay in touch for next steps.
Yeah, let me know. And then if we think there's still the right candidate, I'm going to start generating some revenue, and we'll kind of come back and see if we can make something work with your group. I mean, what do you think? We need like about 2 months prep?
That's about right. Yeah, I'd say at least a month for the deck and so forth. But yeah, send me the updated deck, and let's see what we can do.
I appreciate it. Thanks for your time. All right.
Thanks. Have a good one.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.